Welcome to Big Business This Week. I'm JD Durkin here on the trading floor of the New York Stock Exchange. Another busy week, to say the least, with lots of business headlines to unpack, especially some stories impacting you, the consumer, from Target getting a new CEO to a new partnership that may impact the car rental market. Join us this week on the show to help us make sense of all of these headlines is Barron's reporter, Sabrina Escobar. Good morning, Sabrina. Thanks a lot for taking the time to be on the show this week.
And thanks for having me.
Let's start with a bigger picture, macro view of the state of the U.S. consumer. We know how important the consumer is to overall GDP, but what are the biggest consumer trends or the behavior shifts that we're seeing right now? And how are some of the biggest brands adapting to those changes?
The consumer has been one of the most hotly watched parts of the US economy for the better part of the last 5 years. And I think the biggest surprising takeaway is just how resilient US consumers have been. They have had everything kind of lobbed at them, from inflation to higher interest rates to now tariffs, and people continue to shop. And I think that's been one of the surprising takeaways of second quarter earnings season so far, at least from the companies that have reported, is how much consumers are still spending. Of course, there are many, many caveats to that kind of broader um, observation, right? You do have sectors of the consumer economy that are softening, and people are concerned about weakness among certain income demographics. For instance, lower income consumers haven't been shopping as much as their higher income counterparts. You do have worries about people spending less on dining out, or shopping less for big ticket discretionary items, or spending to remodel their new houses and that kind of thing. The more expensive purchases. So I would, like I said, overall resilient spending with certain caveats that we will be exploring further as retail earnings season go on.
Sabrina, one of the bigger and I think more important stories, and it's not just this year, but it kind of takes us back, I would argue, to when interest rates first started going up, 2022. We talk a lot about this so-called bifurcated economy, where if you are a saver, you've done really well in a high interest rate environment because you have ways where your money can make you money. But if you're a borrower, you're more inclined to feel the pressure, feel the weight of interest rates. And so I think that kind of feeds to your point about higher income consumers are in a strengthened position to continue to spend and maybe continue to put upward pressure on inflation, maybe at the expense of lower or more moderate income consumers. How else are we seeing that split play itself out, given the macroeconomic ecosystem right now?
Yeah, there's several ways that we're seeing that play out. I think one of them has to do with the broader state of the stock market. For instance, so higher income consumers are more likely to be investors, right? And to have a lot of their money tied up in equity. And the stock market has really been on a very strong bull run for the past couple of years as well. And that has helped boost the wealth of people who are invested in equities. And lower income households, they might have pensions, they might have exposure to the stock market in one way or another, but you do tend to see that people who are invested tend to skew to that higher income demographic. So when higher income households feel that they have this sense of wealth undergirding their broader financial stability, then they are going to feel better off in terms of spending. On the other hand, lower income households and lower and middle income, I would say, it really does expand across the income range, are feeling the effects of the macroeconomic situation much more starkly. Inflation, for instance, really negatively impacts lower income households much more intensely than higher income households. Think about households that live paycheck to paycheck. They have to spend most of their income on um, daily essentials, right? That they're not perhaps able to save as much, or put money away into some sort of investment. So everything that they're bringing in, they are spending on day-to-day necessities, which have increased a lot. So you do have a lot of factors that are, that, like you said, are bifurcating the consumer economy into the haves and the have-nots. And I think the retailers that are performing well are those that are catering to those trends very well, and that are able to navigate that and in a way capitalize, or really take advantage of that momentum, or that understanding in the consumer economy going forward.
Sabrina, are there certain consumer categories you think that are showing particular resilience right now in the face of still a fair dose of uncertainty and broader macro questions and challenges about what the road looks like moving forward?
That's a good question, and I think you still see that essentials are performing well, but, it really is kind of a niche category of essentials, so, think about that, the retailers that sell value-focused goods, so think of the Walmarts, Costcos of the world. It really is more about the value add perhaps in the category right now, because you do see winners and losers across many categories, right? You would think of a category like apparel, which is very discretionary, and you would think, okay, maybe discretionary isn't performing as well given the broader macro environment, but you do see companies like an Abercrombie, like On Holding, very strong brands that are still able to attract consumers and keep them shopping, even if they might feel that the consumer environment at large is pretty soft. So I think beyond category specifically, you have to think more about the brands themselves, right? Which brands or which companies have that momentum that is encouraging people to shop despite the macro. Because if you do look at categories broadly, you will see, of course, stronger and weaker categories, but you can still succeed within any of these categories if you have what consumers are looking for and what they're willing to spend money on.
Or is there a role that you see things like social media, influencer marketing playing in the today's overall kind of retail landscape or retail climate? I'd imagine that's maybe a bit of a component now that a lot of these brands or consumers maybe didn't have to worry about in economic cycles past. Is that at all something that that you see working its way through the track of the economy?
Absolutely. Social media, I think, has reshaped retail in such a drastic way in ways that perhaps we haven't fully seen yet. And then let's not even talk about AI because that's a whole different kind of iteration of how technology is playing a role in the retail sphere. But with influencers, I think you're finding a really interesting dichotomy again. You do have trends of influencers just going out and showing off these hauls and how much they're spending and all of these things. And that does encourage people to shop, right? That's why in the past, a company like Shein has been so successful because it managed to really harness that influencer network and the sway that influencers have over younger consumers to be able to encourage them to buy the brand. And you have seen that other companies that are able to, like I said, harness that brand momentum turn to social media and influencer marketing to drive home their point, right? I think it is an essential part of many companies' social media strategies now, and it should not be ignored at all. I will say though, you do also have these instances where social media can be a kind of broader indicator of consumer economy, what consumers are thinking, how they're feeling about a brand. And I think you've seen over the past couple of years how different people are taking to social media to complain about the economy as well. And you've had all of these quote unquote recession indicators where you have people going in and talking about how they're trying to avoid consumerism or thinking about shopping at thrift stores and showing their thrift store hauls, or I read about this type of company or store called a bin store, which is basically, discount stores that sell the returns of companies like Amazon and Walmart that they no longer want to put on the shelves, and they sell them for anywhere from like $7 down to as little as 50 cents, right? And so you might have some influencers posting about their bin store haul and the kind of bargains that they're finding there, or the bargains that they find at a TJ Maxx or a Marshall. So you do have like the crazy consumerism side of influencers, but you also have kind of the new thrifty is cool, budgeting is cool, bargain hunting is cool, all within possibly the same platform. So I guess it just depends on which side of social media you find yourself on.
Yeah, and that's why I think an earnings week like this is really interesting because on the one hand, obviously you and I are chatting in the heart of retail earnings season here, and there's always been a fascinating separation between, let's say, a Target, which might have a slightly higher income target consumer, no pun intended, versus a TJX brands, right, which is like Home Goods and Marshalls and Maxinistas like myself who love the treasure hunt. are still willing to kind of go through kind of the bins and see what you might be able to get at a discount. And then you got Walmart. And so let me ask you about Walmart, because this morning we had earnings from them, and the stock is trading down currently about 4%. It looks like they did well on the top line revenue side, but missing on earnings expectations. One of the more interesting stories to me in Walmart, and I did this about a year or two ago, Walmart said they had more six-figure income earners shopping for their essentials at Walmart than any time in the company history. And I wonder, kind of top line, what we've seen from Walmart here from this quarter, and what does that tell you about maybe the shifting narratives or approaches from consumers across various income brackets?
Yeah, Walmart's report was interesting. Like you said, they had a really strong top line, right? They were able to grow revenue, outpacing Target's and other competitors, but they fell short on the bottom line, and they said that that was tied to the way that they a few accounting measures and certain claims that employees made. So it wasn't perhaps tied to the underlying strength of the business, of the core retail business, which I think is important to note. Because if you do look at the underlying strength and how the company has been performing, it is showing just robustness across the board, right? They are firing on all cylinders, call it what you want, whatever metaphor you want to use, but they are doing really well in terms of attracting new consumers and keeping them, which I think is key here, because you have seen in the past that Walmart tends to gain market share among all income demographics, including that higher income shopper that perhaps might have before gone to a Target or a Whole Foods or some, higher end grocery store, now looking to shop for bargains at Walmart, just, trying to save a penny here and there. But in the past, those consumers haven't stayed at Walmart, right? They then, once the moment of economic uncertainty has passed, they've returned to their typical shopping routines, their preferred retailers, and seen Walmart as a last resort. But the company now isn't being perceived that way. They've undergone a really big change at a very fundamental level over the past couple of years, including just things that people across all income spectrums can really appreciate. So their e-commerce operations, their drive up, pick up in store offerings, their merchandise as well. I think they've really improved some of their private labels and the brands that they carry, and invested in the store experience, right? To upgrade the stores, make them a bit nicer, have it well staffed, and that is paying off. I mean, I went to my local Walmart not too long ago, and you look around and you see just at the parking lot, right? You see different types of cars, from something really high end like a Mercedes or an Audi to kind of a car that you wouldn't associate with somebody who's more on that higher income level. So you really do see how the retailer is attracting people from across all demographics, and that has been a real boon to Walmart, which we saw in the top line growth. Again, earnings might have been soft, but they did raise guidance for the fiscal year, at least in terms of their sales guidance, and that just shows that they're able to really navigate through the current environment, which hasn't been easy for anybody, not even Walmart.
Of course, on the backdrop of this is that none of these companies want to earn the negative press, at least in the eyes of the president, that may be associated with, hey, coming out and saying, hey, sorry, folks, we actually do need to kind of quietly pass down these costs on to consumers, right? Because then you wind up on the receiving end of a critical truth social post. And I don't think there's any CEO in America who wants that right
No,
now. Um,
absolutely not.
but yeah. So let me ask you that then. Is that a little bit of an additional either motivation maybe for these companies to say, all right, we'll eat into our own margins right now, because perception drives reality, and there's political implications. There's a political actor that's willing to kind of punish, at least publicly punish, some companies that are sitting there saying, we don't know what to do with these extra costs as a result of trade policy.
Absolutely. I mean, Walmart actually, not in this earnings season, but in the previous earnings season, was one of the first to report from the big box retailers. And they did say, prices are going to go up as a result of tariffs. And they did, in fact, attract the president's ire. And I think after that, a lot of other retailers kind of shied away from speaking to that directly and kind of sidestepped the issue. They talked about things like portfolio pricing approach, that they were trying to do anything but say the actual words, we're going to have to increase prices. And I think that trend has continued to some extent this earnings season. That said, Walmart did say today that um, they just hadn't seen the price increases really come into effect just yet, right? Because so many retailers, including themselves, had pulled forward orders. They tried to get everything in before the tariffs hit. So they had pretty robust inventory that they were able to still sell at the old, non-tariff rate, and that meant that they weren't necessarily having to increase prices. That said, they did say that as they've been restocking right at the higher tariff rates, that is going to change, that they are seeing prices increase, and that will continue throughout the quarter and the next coming weeks. So while price increases have been gradual in response to tariffs up until now, I think the coming weeks might be a little bit more hard to ignore, and then you also have a lot of seasonal merchandise coming in. Think Halloween, Thanksgiving, Christmas, and all of that stuff tends to be, and I'll say it is more subject to tariffs. So that might be a bit more expensive this year. And consumers might actually feel it now. So it's going to be harder for retailers to tiptoe around talking about price increases when people are seeing it show up in their wallets so clearly.
Yeah, that's a really interesting point. We saw that big surge in imports for the first quarter, and it kind of led us to that somewhat anomalous negative GDP print, which obviously we've litigated at this point well. But it's interesting to think that at that point, the big importers are probably not bringing in their back to school or their holiday shopping stuff. So now is the time to import a lot of those key things as we get closer to those seasons. Walmart stock is still doing pretty well for the year. It's up about 9 or 10%. The same, however, Sabrina, cannot be said for Target. Let me take a quick look. Shares are down about 28% from the start of the year for Target. They're down 1.5% today. New CEO, they're trying to break a slump in the stock price, but also a general slump in sales. What do you think is behind the calculus here for Target to go in a different direction with leadership at the top?
Target, they've been in a really tough spot for a while now, and there was a lot of hope. I think investors had a lot of hope that once Brian Cornell, as the current CEO's term ended, that Target would bring on an external hire, right? I think that was the big push that many investors were hoping for, given that there's a sense that the company's current strategy just isn't working for it to keep pace with the likes of Walmart and Amazon and other competitors that are really well capitalized and very much so in touch with what the consumer is asking for, which I don't think Target has done a good job of lately. And so, they decided to go with an internal hire instead. They promoted Chief Operating Officer Michael Fidelki. And, this is nothing against Michael Fidelki. I think is a fantastic operator. And I'm sure the market will give him the benefit of the doubt and some time to prove himself as a CEO. But I just think anybody that they hired from within the company was going to be received, a bit negatively by the market, just because investors were really pushing for somebody to come in with fresh perspectives, a new kind of completely different turnaround plan, and try some things that they haven't tried before. So it's definitely tough for Target. To their credit, they have been trying to turn things around. A lot of problems that they're seeing aren't necessarily their fault, right? It's not self-inflicted. They've been really hurt by inflation. They've been really hurt by the trends that have pushed consumers to focus more on buying essentials as opposed to discretionary items, which is really Target's bread and butter. But either way, there are still some execution missteps that have put them, in a bit of a tight spot, I think, with investors. So it's a wait and see game at this point.
Yeah, absolutely. Let me ask you about McDonald's efforts here to tackle new pricing. The stock chart for McDonald's is interesting because I tend to look and try and see how the company is currently performing relative to its April lows, right? The so-called Liberation Day lows. McDonald's is a rare stock chart because its lows were not in April. Its lows were much more recently, June 24th. It is up about 10% off those lows. So you're dealing with a different series of price action, different pressure points, I would argue, for that particular stock. What do we see out of McDonald's, knowing where they're situated across the country and really around the world and how important they are to the food landscape?
McDonald's is another interesting one. I think that they have been doing fairly well in capitalizing on consumer demand for value. But like I said earlier, as we were chatting, people aren't eating out as much. When things are tight at home, when you're a little bit concerned as to where the macro is going, one of the first things you're going to cut down on is dining out, right? And And it isn't just McDonald's. A lot of restaurants have really been, especially in that fast casual or fast food category, have noticed declines in store visits and overall foot traffic because people say, you know what, there's food at home. When I was a kid, I used to hate my mom telling me that there's food at home, but then you pay your own bills and you understand it. You're like, you know what, yeah, there is food at home. I can make something up. So that's happening across many households, um, and the thing with McDonald's is it always has been considered kind of a value food chain, right? You go in, you expect to pay less than $10 for a burger, fries, and a soda. And across different places in the country, those prices have really gone up. McDonald's operating model is based on franchisees, right? And so they have the liberty to set their own prices for goods. And for many, operating costs. Oh, wow, I don't know what just happened right now. Lights went off over here. For many, operating costs have really gone up in the past couple of quarters, and they pass it on to the consumer. And in some places, I mean, think of your airport McDonald's, or your when you're going on the highway and you go into one of those really overpriced rest stops, and you end up paying $18 for a Big Mac and a soda. And those are the kinds of price shocks that I think have really scared consumers out of buying at McDonald's. So for what the company's trying to do now, all of this to say is they're trying to lower those prices, and they're negotiating with franchisees to get them to offer kind of blanket value deals that can really bring McDonald's back to its core identity as a value food destination, and to you know avoid some of that sticker shock that some people have been getting in the past couple of months as they've been paying $18 for a fast food meal.
And yeah, I mean, at that price point, you're looking, you're saying, well, why don't I just go spend that money at a Chipotle or a Sweet Green with a
Right.
$20 salad, where your nutrients are far different in a category, respectfully, than the McDonald's you get. All right,
Absolutely.
we're about out of time, but I would love to ask you any story in the world of business, the market, something that you think either we're not talking enough about, or something you think maybe we should be paying a little bit more attention to, Sabrina.
Right now there has been so much chaos in the markets. I actually think we should be paying more attention to home furnishings. And that's something that I'm working on, kind of a longer term project. The category has been really soft in the past couple of years. Everybody really stocked up on furniture during the pandemic, and you're really only going to buy a couch once every couple of years, 5, 10 years. So you haven't seen a lot of activity in that sector for a while, and it remains soft, although it is improving. But you do see some really strong results coming out of a company like Wayfair, which I think is absolutely fascinating. They reported results earlier in the season, and they had a very strong quarter. And I think we're not talking about the way that people are buying furniture. It's not coming out of a place of, let me buy a new house and refurbish, 5 new rooms, but it's really coming from this place of, well, I might be stuck in a house because I can't secure mortgage rates as low as one that I have right now, or I might be stuck in an apartment because I can't buy a house right now. And I want to make my living space just so much more comfortable. I'm not going to wait for the investment. So they're taking to buying things that are just enough to spruce up their houses, without really spending all that much. So you are seeing some really interesting bright spots in the furniture category that don't apply to the broader, furniture industry. I think that one is really going to be challenged given tariffs and how much of it is produced in China and Vietnam. But within there, you still see some strength, which I think is fascinating, and trying to come up with the idea of, okay, why are we seeing strength in a Wayfair? How are people living, and how are people trying to adapt to the macro by trying to adapt their spaces to it? So I think that's something worth keeping an eye out for, and seeing how that story plays out as interest rates perhaps start dropping, and the housing market picks up. So hopefully we will see a broader kickstart there. But again, wait and see, which feels like a big trend right now.
Yeah, wait and see is certainly one of the top themes of 2025.
Absolutely.
Uncertainty, and then when in doubt, wait and see. Sabrina Escobar is a Barron's reporter. Very grateful for you taking all this time to be on the show this week. Sabrina, thanks a lot.